Hello investors, welcome to Business Learnings. In this video, I'm going to address the question whether you should invest in the stock market at this point of time or not, whether it's very overvalued or is it fairly valued, what should be your investment rationale, whether you should be investing or you should just wait for some time for the markets to correct, or what exactly should you do. So as you all know, the markets NIFTY 50 actually, it's trading close to 11,500. Its all-time high was beyond 12,000, but it's very close to it, less than 10%. But the economy doesn't simply fit into it. The economy has actually contracted, so we are in a recession. Economy has contracted by 5 to 10%, and we are still seeing the stock market rising. In fact, a few days ago, I think the day before yesterday, RBI's governor Shaktikanta Das, he gave a statement that that stock market and the economy are not connected and we might see a correction anytime. So what exactly is going on? Nifty's PE is above 30. Everything just points to the direction that the markets are hugely overvalued. So whether you should sell out all your investments, what exactly should you do? So as a retail investor, I'll tell you, it's nearly impossible to time markets unless you are extremely good at technical analysis. In those cases also, you are only right 60 to 70% of the times. You are not right 100% of the time. So no one can predict whether markets will do well or not, whether they'll crash or not. If they crash, when will that happen? If they correct, when will that happen? If they'll continue to go up, what will be the point where they will stop? No one knows that. We all know the reason. The unprecedented liquidity infused by various governments across the world. They call it quantitative easing, which simply means printing a lot of money. Economic output is not growing, but you still print the money. What is going to happen? Inflation is going to happen because there is a lot of money and the amount of work done is still the same. So a lot of people having a lot of money, but the amounts of good is constant. So the price of goods is going to increase, and that's what will happen. In fact, very recently, that is the reason why inflation of India also increased, but that's a completely different. I'll not go into that idea. It's a completely different field in itself. So at this point in time, as I said, it's very difficult to time markets. Warren Buffett cannot time markets. He says he cannot time. You too cannot time because you are not smarter than you or me. No one is smarter than Warren Buffett. What should you do? There are two things that you can do here. First thing is, you can sell off everything that you have if you believe that markets will correct, because they will correct and you will find a better entry point for your stocks. But when will it happen? We don't know. The money that you will get after selling all your stocks, where will you park it? Because FD rates are also at all-time lows. Liquid funds, the yield to maturities of liquid funds are also at all-time low. You cannot park it, right? So better is the second option, where you will remain invested in the stocks and you will continue doing your SIPs, systematic investment plans, which simply tells you that you will invest whatever the stocks you have picked, whatever the mutual funds that you have shortlisted, you will keep contributing the SIPs into them every month without waiting for the markets to crash or to go up or whatever. Why will that help? Let's say you keep adding a constant amount of money every month through your SIPs. When the markets crash, you are going to buy more amount of Nifty, right? For the same amount of money. Suppose you put 50,000 rupees every month in Nifty. At these times, you would only be able to buy about four Nifty pieces. When the markets crash and they go to 10,000 levels, you will be able to buy 5 pieces. Since you are only allocating constant amount of money, you will be able to buy more, and that's why your averaging will happen better than any other case. And in this case, you will also not have the worries of tracking the market, whether they'll go up, go down, or whatever happens. A lot of economists have this belief that markets are going to correct anytime soon. People have different kinds of views on when is it going to happen. Some say that it will happen the next 1 month. Some say that it will take the end of 2022, but no one knows what's going to happen. Now, why is market overvalued? First is quantitative easing that I already talked about. Second, which was printing a lot of money across all the governments, and this is going to happen. This will continue happening. US government has said that it will do everything possible to postpone or to get over this hit that their economy has taken, and so all the governments across various countries will do. A lot of that money finds its ways into emerging economies because people like to take risks, and that's why the stock markets of India has also been going up, majorly because of FII inflows. This is one reason. Second reason is we know that we will get over coronavirus anytime soon, probably in a few months, probably in a year, but we will get over it. And once we get over it, the jump in the earnings will be quite unprecedented. And that's what has been discounted for the current market prices. Markets are always forward looking. Remember that. The earnings of the company do not determine what its future price will be. What its future earnings might look like, they determine how the stock prices will be. So I hope this video made it clear. I hope you were able to understand the concepts. So the best approach is to keep doing your SIPs and hope for the best. Thanks a lot for watching this video. See you in another video. Bye.